All right, everyone, welcome back to Crypto Brain. Today we are analyzing Toshi with a focused discussion on its integration with CoinMarketCap and the extremely bullish projections currently circulating, including the idea of a 1000x expansion scenario. As always, we will approach this through structured market reasoning rather than emotional speculation. Beginning with the overview, visibility is the foundation of capital flow in digital assets. Integration with CoinMarketCap is not merely cosmetic exposure, it represents global discoverability. CoinMarketCap functions as the primary data gateway for retail and institutional participants entering new positions. When an asset strengthens its presence on that platform, accessibility and transparency increase simultaneously. From a structural perspective, CoinMarketCap integration enhances three immediate pillars. First, visibility amplification. Millions of daily users reference CoinMarketCap for ranking, price discovery, and token verification. Increased exposure directly increases probability of new capital inflow. Second, credibility reinforcement. Data transparency, verified metrics, circulating supply visibility, and ranking presence reduce informational friction. Lower friction increases investor confidence. Third, algorithmic discoverability. Assets with improved profile optimization tend to benefit from watchlist additions, trending metrics, and ecosystem categorization. These factors accelerate narrative spread. As we move through the visible metrics and ranking structure, Toshi's positioning within broader market tables becomes significant. Ranking shifts influence perception. Perception influences capital allocation decisions. Now addressing the highly aggressive projection being discussed, the 1000x pump thesis. Such a multiple represents an extreme macro-cycle asymmetry. It is not a standard growth expectation. However, from a purely mathematical standpoint, extreme multiples are historically possible in early-stage digital assets under specific aligned conditions. For a 1000x expansion scenario to even enter probabilistic conversation, several structural variables must align simultaneously. First, extremely low starting valuation relative to total addressable market. Second, sustained and exponential liquidity growth across multiple exchange venues. Third, dominant narrative positioning within a broader market expansion cycle. Fourth, infrastructure alignment, including exchange depth, ecosystem compatibility, and ongoing development. CoinMarketCap integration strengthens the discoverability variable significantly. Visibility is the ignition point of reflexive cycles. When visibility increases, watchlist additions rise. When watchlists rise, trading curiosity increases. When trading activity increases, volume accelerates. Volume acceleration can fuel price expansion. However, infrastructure and liquidity ultimately determine magnitude. If Toshi combines CoinMarketCap discoverability with expanding exchange integrations, deepening liquidity pools, and strong community engagement, the probability of sustained exponential phases improves materially. It is essential to frame the 1000x narrative responsibly. It should not be interpreted as a guarantee or confirmation. Rather, it represents a theoretical asymmetry scenario during an aggressive macro bull cycle, where liquidity expansion, meme sector dominance, and infrastructural scaling converge. Looking at structural behavior, volatility remains consistent with speculative growth phases. Consolidation patterns following impulse expansions suggest absorption rather than immediate distribution. This is constructive for continuation. Another key factor is capital rotation dynamics. During strong market expansions, capital flows from major assets into high-visibility emerging assets. CoinMarketCap integration enhances Toshi's ability to capture such rotational inflows because it increases ranking visibility and trending exposure. If broader crypto sentiment enters an expansionary phase and Toshi maintains strong ranking presence, reflexive cycles could develop rapidly. Price appreciation attracts attention. Attention attracts volume. Volume attracts liquidity providers. Liquidity deepens price discovery. This compounding mechanism is how extreme multiples historically occur. Risk calibration remains essential. Even with increased discoverability and bullish narrative strength, Toshi remains a high-volatility speculative instrument. Structured exposure and disciplined allocation remain critical. To summarize the structured view, CoinMarketCap integration materially strengthens global discoverability. Increased visibility enhances capital inflow probability. Extreme upside scenarios are conditional, not guaranteed. Sustained liquidity expansion is the decisive variable. Toshi now benefits from amplified exposure within the primary global crypto data gateway. If this visibility compounds with liquidity growth, exchange expansion, and supportive macro conditions, significant revaluation phases become increasingly plausible. This has been a disciplined, institutionally framed breakdown. If you value composed, professional crypto analysis delivered without exaggerated promises, ensure you are subscribed to Crypto Brain. Until next time, remain analytical, remain disciplined, and respect both opportunity and structure.